students. Today we will discuss one of the important topic of economics, that is your cost. Why I told you important? Because you are familiar with that topic of cost. As a management student, as a commerce student, I hope you know equally about the cost. That is why I told you that it's one of the important concepts. We have discussed about consumption, we have discussed about production. Now it is time to discuss about your cost. Without cost, nothing is there. Without cost, we are empty. So that is why cost is an important part of our analysis of economics. So let me write about the topic, that is your cost. In simple language, whenever we discuss about cost in general, cost means it is the expenditure incurred. Cost means the expenditure incurred by the farm, by the producer to produce a given level of output. Cost refers to the expenditure incurred, made by the farm, made by the producer to produce a given level of output. So when I am telling the expenditure made by the farm, there are many expenditures. I told you that production is not a single task, it is a multitask, it's a very difficult task, it's a complex task. That is why all consumers are not producers, but all producers are consumers. The task of production is quite difficult, it's quite complex. You have to understand. We can't understand, but it's simply we will try to understand the process of production, starting from production till the end of production. It's a big task. That is why, accordingly, there will be many costs. There will be costs, small costs, there will be bigger costs. So, right from starting from production till the end of production, there are many costs associated with the producer. And when we group together, then we will get the costs. So, cost refers, for example, you talk about the payment. When a producer hires a land, the producer has to give rent for that. When a producer hires some laborers, it has to provide some wages for that. When the producer takes loans from the bank, it has to provide interest. When the producer makes some arrangement for raw material, it has to make some payment for that. So all the things, including depreciation costs, including insurance payments, including tax payments, all are the part of the cost. I told you, right from the starting of production till the completion of production, everything, every cost we are involving, every expenditure we are incurring, that is a part of your costs. So cost is the expenditure made by the farm to produce a given level of output. Chalo, let us talk about different types of cost. This is the starting class. We will talk about different types of cost before going to talk about the depth of the cost syllabus. So when you talk about different types of cost, to my mind, it comes the first to your money cost and real cost. When you talk about cost, then it comes your money cost and real cost. This is the first type of cost that will make a difference for our better understanding. Remember, money cost, as all of you know that. Cost in monetary terms, very simple. Cost in money terms, the cost which is paid in money terms, that is known as your money cost. For example, the payment you are making for raw material, you are paying in money. The payment for the use of land, you are paying rent for that. Rent is also paid in terms of money. You are making payment for laborers in the form of wages, that is also paid in terms of money. So all type of expenditure which is being undertaken, which is being incurred in forms of money, remember the word money, that is called money costs. So when you talk about money cost, any cost that is made in terms of money, that is called as your money cost. You remember, any cost, you think about that. Now let us talk about your second point, that is the real cost. When you talk about real cost, you should forget about the money concept. I am making the things very simple and clear. When you talk about real cost, you should forget about monetary concepts. Because in the production process, actually, we have to see the efforts by the producer, the efforts by the laborer, the pain of the laborer, the sacrifice of the laborer. That will be part of the real cost. Real cost is not a monetary cost. In real cost, there is no place of money. In real cost, only we will analyze, only we will discuss the sacrifice, the effort, the pain undergone by the laborer, by the producer. That is a part of real cost. Take for example, when a woman laborer goes for some work with leaving her newborn child in her house, definitely she is sacrificing something. So this type of sacrifice is a part of real costs. So real cost is not at all a concept related to monetary concept. There is no question of money in real cost. Rather, you will find some words of emotion, that is your sacrifice, effort, pain, that is a part of real cost. Real cost is never part of money cost. In real cost, you will not take into account a single use of money. So all type of sacrifices, you understand, all type of effort, all type of pain. I told you it is not an easy task. When we are doing production, then we have to sacrifice something, then we have to put lot of our efforts, then we have to take so much pain. So if you group together all types of things, then it is called your real cost. I hope you are being clear about the distinction between money cost and real cost. Is that clear? Chalo. So we have discussed about the distinction between your money cost and real cost. Now again we will go for one more concept, that is your important cost, that is your economic costs. What is that? Economic costs. Economic cost, actually we can classify economic costs under two heads. One is your explicit cost and another is your implicit costs. Economic costs are being classified mainly under explicit cost and implicit cost. And in last part we have to add normal profits. Then it becomes the entire economic cost. Let me talk about your explicit cost and implicit cost. When you talk about explicit cost is the cost which is kept, which is recorded in book of accounts. It is a part of book of accounts. All costs are being recorded in book of accounts, whereas implicit costs are not a part of book of accounts. They are not recorded in the book of accounts. Is that clear? Explicit costs are the cost which is recorded in book of accounts. All types of expenditure. You take about rent for land, you talk about wage for the laborer, you talk about interest for the capital, you talk about profit for the organization, you talk about depreciation cost, you talk about insurance costs, you talk about tax payment. So all type of input costs and non-input cost, all type of factor cost, non-factor cost. You try to understand. I am telling everything in clear. When you talk about explicit cost, you should not mind that it only includes the factor cost. We have paid rent for land, so that is a part of explicit cost. We have paid wage for laborer, so that is a part of explicit cost. Not like that. We have to include both factor cost plus non-factor cost. Non-factor cost in the sense your insurance payments, tax payments, your raw material payments, that is a part of your non-factor cost. So when you talk about explicit cost, the cost of the all the factors and also cost of the non-factor cost, that is a part of explicit cost. One important point I told you that when you talk about explicit cost, you have to remember that these costs are being recorded in book of accounts. These costs are being recorded in book of accounts and the entry books as a part of record keeping. Chalo. I hope you understand the concept of explicit cost. Is that clear? Shall we go to this one? Chalo. Thank you very much. Let us go about implicit cost. When you talk about implicit cost, there is not so much distinction, but I will tell you a little difference is that, take for example, when a producer starts an activity, first of all he has to see the land, first of all he has to arrange the land. If he hires land outside, then he has to pay rent for that. Are you clear? When a producer starts a business, when a producer starts production, first of all he has to arrange a land for that. When a producer hires the same land from outside, then he has to make payment for that. So in that case, the rent for the land, that is a part of explicit cost. It is not necessary that all producers have to hire land from outside. Sometimes it becomes that a producer may have his own land also. Sometimes a producer may have his own land. So when a producer is having own land, he doesn't need to pay cost expenditure towards outside. He has to keep that money within himself. So that type of payment is a part of implicit cost. You understood? When the producer pays the payment for the factors which is owned by himself, the payment for the factors which is owned by himself and retained by the producer himself is known as your implicit cost. So, well, I'm making very clear, when the rent paid outside is a part of explicit cost, rent kept by the producer himself which is owned by himself, is a part of implicit cost. Likewise, you can take when the producer goes for investment, goes for loan from outside, he has to make interest, he has to pay interest for that. So paying interest for outside, that is a part of explicit cost. But it's not necessary that all producers should take loan from outside. All producers go for bank finance. Sometimes the producer may have his own resource, may have his own finance. So in that case, when the producer makes arrangement of finance for himself, then the interest which he is supposed to pay outside, he retains himself with him. And that is a part of implicit cost. You understood? I hope you will understand everything. So implicit cost is the cost which is retained by the producer, which is paid for the factor services owned by the producer. Remember one thing. Listen carefully. Please. Implicit cost is the cost which is paid for the factor services owned by the producer, and the cost is retained by the producer himself. That is called your implicit cost. Whereas in case of explicit cost, he is paying the cost, he is paying the expenditure outside. That is your explicit cost. And one point of distinction is that it is recorded in book of accounts. It is not recorded in book of accounts because it is retained by the producer himself. It is taken by the producer himself. And one more point, because we are going for a question and answer session, we have to discuss a question and answer. A question is there for you. Explicit cost is otherwise known as your accounting cost because it is recorded in book of accounts. Explicit cost is otherwise known as your accounting cost because it is recorded in book of accounts. So a question might be there for you that explicit costs are known as dash. You will very pleasant, we feel right that it is known as your accounting costs. Explicit cost is known as your accounting cost. And one more question for you is that economic cost is equal to dash plus dash. Economic cost is equal to dash plus dash. You can write that explicit cost plus implicit cost, and in last part we can add normal profit. It's an interactive session. In course of our discussion, we should discuss everything, and also we should discuss the question and answers. Only then we will be useful. Is that clear? I hope you understand. If a question comes, the cost which is paid in monetary terms is known as dash. What you will write? Money cost. Then second question comes, all type of efforts, all type of sacrifices, all type of pain that is being undergone in production process is referred as dash. What you will write for that? It is your real cost. Very good. Thank you very much. Now, if a question comes that the payment, the cost which is incurred for the services, for the factors used, owned by the producer himself, what you will write? Implicit cost. Very good. Thank you very much. I hope you understand all the concepts. Thank you very much for your cooperation. You are looking very good now. So, now we have understood explicit cost, we have understood accounting cost, we have understood your implicit cost. We have covered all. I hope you are very much clear about that. You are looking confident than me, I think. So, we have discussed each and every concept related to cost. Now, I will the normal profit. Normal profit is very interesting concept. Looks small, but have a big importance. Normal profit. What is about normal profit? Normal, supernormal, what is that actually? Normal profit is the profit which a producer expects to get at the time of starting business. Normal profit is the minimum profit that is required for the producer to stay in business. If the producer doesn't get that profit, he will never stay in the business. You understood? Normal profit is the minimum profit which is required for the producer to stay in business. If a producer doesn't get that, then he will never stay in business. And over and above what a producer gets, that is called supernormal profit. More than normal profit is known as your supernormal profit. So, normal profit is the profit that is being required to keep the producer to live in the business. That is called your normal profit. You understood? Normal profit. Normal profit. If you combine explicit cost plus implicit cost plus normal profit, you will get the entire cost which is known as your economic costs. Understood? I hope you understood the points of the cost. We have discussed money real cost. We have discussed this one, and we will discuss some other costs regarding that. When you talk about other costs, then the discussion of cost will be incomplete without the discussion of the opportunity cost. When you talk about opportunity cost, I will go back to my previous studies. I will go back to my origin of economics. Human wants are unlimited, very good. Human wants are very good. So, but resources are limited. Human wants are unlimited, but resources are limited. So, you understood, na? Human wants are unlimited. Even you ask Salman Khan, he will tell you number of items that he wants nowadays also. Forget about ourselves. We have so many want to fulfill. But even if you ask superstar like that, MS Dhoni and also Salman Khan, they will tell that their wants are still there to fulfill. That is why we are thinking that we are not getting income, so much level income. We are getting income in lakhs. So we are having only multiple. We have wants, not like that. Persons who are getting income in crores also, they have also number of wants. So that is why we are calling that human wants are unlimited. But sorry to say that resources are limited. We can't fulfill all our wants. We have to arrange, we have to make necessary arrangement regarding that resources among various wants. So, from the 2 points, there is an emergence of cost that is known as your opportunity cost. To understand the concept of opportunity cost, you should understand the 2 lines I told you. Human wants are unlimited, but resources are scarce. Resources are limited. We can't use a resource for different uses. At one time only we can use a resource for a single use, doesn't it? We can use land for a single purpose at one time. We can't use the same piece of land for different purposes at same time. Can we use? We can't. We can use land at the same time for a single purpose. But we have many wants. We have many wants to fulfill. But sorry to say that we can only divert a piece of land for a single purpose. So when you divert lands for a single purpose, then we sacrifice, we forgo, we sacrifice the land, the use of land for other purposes. You remember, when we divert a piece of land for one purpose, at the same time, we sacrifice the use of land for other purposes. So, that is the meaning of opportunity cost. Opportunity cost is the cost which is actually meaning for the cost of alternative use. Opportunity cost refers to the cost for alternative use. The cost which is coming from alternative cost use, that is called your opportunity cost. We will discuss the things later on in detail. In diagrams, we will discuss about the mode, how the opportunity cost operates. Chalo. I think for the timing, you are clear about opportunity cost. Cost which is foregone, cost which is there for an alternative resource, that is known as your opportunity cost. Now, after discussing about this one, let me talk about one of the important concepts that is coming to my mind regarding cost. That is a fixed cost and variable cost. We will talk about fixed cost and variable cost, but it will be illogical to go for that. Before we discuss, that is cost function. There is a question for you in the examination, cost function. What is cost function? Cost function is the relationship between cost of production and outputs produced. We can write cost function is the relationship between cost of the production and output produced. Symbolically, you can write C is equal to function of Q. Q stands for output. C stands for cost. This is about your cost function. You have to understand that. You have to understand the relationship between cost and output. There are different factors involved in production process. That is why the relation comes important. Now we will discuss about that, your fixed cost and variable cost. From the time angle, from the time point of view, we can distinguish cost under 2 heads. One will be your short run cost, one will be your long run cost. So when you talk about short run cost, then there comes the actual meaning of fixed cost and variable cost. It is important for you to understand about fixed cost and variable cost. So many times the question is coming, so many times the question is very important. For me, I can say this question is very important question for your all examinations actually. Fixed cost and variable cost. This is the point where we start the discussion about cost. Fixed cost and variable cost. You should remember that this distinction only hold logic when you talk about short run, because in long period, then there is no fixed cost. Nothing remains fixed in the long run. Everything remains changed in long run. That is why when a question is there for you in the examination, in long run, all costs are known as dash cost. You will write all costs are known as your variable cost. There is no fixed cost actually. But you can see fixed cost and variable cost as a part in short run. Again question comes here. In short run, the cost is divided between dash and dash. You will write fixed cost and variable cost. Is that clear? In short run, we can divide cost as fixed cost and variable cost. But when you talk about long run, then there is only the concept of only variable cost. There is no fixed cost, because I told you in long run all are variable. In long run we can change everything. In long run we can shift the Raukla steel plant also. So in long run there is no fixed cost. In long run there is. So we are discussing about the distinction between fixed cost and variable costs. I told you that when you talk about fixed cost and variable cost, we will see that both fixed cost and variable cost only in short period. We will never see both types of cost in long period, because in long period nothing remains fixed, nothing remains constant, all are keep changing. That is why in long period only there is only a single cost, and that is only your variable cost. So the distinction between fixed cost and variable cost is very interesting. The distinction between fixed cost and variable cost is also very important, and you should remember that you will make distinction between fixed cost and variable cost only due to the emergence of your short run cost. When you talk about short run, you talk about fixed and variable cost. When you talk about long run, you should only talk about your variable cost. So let me talk about the distinction between your fixed cost and variable cost. When you talk about fixed cost and variable cost, actually we can write that fixed cost is the cost which is paid. In simple language, fixed cost is the cost which is paid for the use of fixed factors. Are you clear? Fixed cost is the cost which is paid for the use of fixed factors. Fixed factors, for example, land. Fixed factor, for example, machines. Fixed factors, for example, equipments. Fixed factor, for example, permanent employees. They are the fixed resources, and the payment for them is known as your fixed costs. Payment towards land, payment towards machines, payment towards equipments, payment towards permanent employees. That is the part of your fixed cost. When you talk about variable cost, actually, you should think that variable cost is the cost which is made for the use of variable factors. Variable cost is the cost which is paid for the use of variable factors. And variable factors are raw materials. Variable factors are your daily laborers. Variable factors are power supplies. So, payment for the use of raw materials, payment for the use of power supply, payment for the use of your raw materials is a part of your variable cost. You understand? Here I would like to tell you one important point is that a same individual may be a part of fixed factor, a same individual may be part of variable factor. A same individual may come under fixed cost, same individual may come under variable cost. You should understand. Why? Because when an individual is working as a daily laborer, the payment for that is known as your variable cost. When an individual is working as a daily labor, the payment for that is known as your variable cost. Because when he comes, he will be paid. When it doesn't come, he will not be paid. When he comes, we should make payment for that. When it doesn't come, we should not make payment for that. That is why it goes changing. Variable cost goes on changing with the number of laborers and with the number of times. But when the same person is working as an employee of the organization, when the same person is working as an employee of an institution, if the organization is a company, then the payment for him is known as your fixed cost. Because when he comes or not, whether he comes 20 days or 25 days in a month, we have to pay the salary for the entire month. We have to pay the salary for the entire month. Although he works for the 20 days or 15 days or 30 days or 25 days. That is why actually the payment towards the permanent employee of the organization is called as actually fixed cost, because the cost, the salary of the employee remains fixed, but the wage of a laborer doesn't remain fixed. That is why the wage will be coming under your variable cost, and the salary of the employee will be coming under your fixed cost. You understood? So, fixed and variable cost, one more point comes here, that fixed cost is an independent cost. Whether you produce, whether you doesn't produce, whether you do not produce, actually fixed cost will never changes. It remains purely fixed. Fixed cost is known as independent cost, whereas variable cost is known as your dependent cost. Fixed cost is not related to your production. whether you produce large, whether you produce small, whether you doesn't produce, actually fixed cost will be there. It is not linked to output. Whatever output you produce small output, you produce large output, fixed cost will never change. That is why, and that is not linked to output. That is why it is called fixed cost is known as your independent cost. Whereas your variable cost is known as your dependent cost. Where when you expect more output, you should employ more raw material. You should apply more raw material. When you expect more output, you should give more fuel, more power supply. That is why variable cost always keeps changing, and it is purely depending on output produced. It is purely depending on the output produced. That is why variable cost is known as dependent cost and fixed cost is known as your independent cost. This is the point you should understand between fixed cost and variable cost. One more I can tell you. Fixed cost will never be zero, but variable cost will be zero. Fixed cost will be never zero, but variable cost will be zero. Fixed cost will never be zero in the sense when you talk about production, when you start about production, you have to keep the land for that. You have to arrange the land for that. If you arrange the land, then you have to pay for that. Although you produce or not. When you talk about production, when you start about production, you have to hire the land. When you hire a land, whether your production is started or not, you have to arrange payment for that. You have to pay rent for that. That is why fixed cost will never be zero. When you hire land, when you hire machines, when you purchase equipments, then there you have to incur cost compulsory. Whether you produce or not, it doesn't matter. But when you acquire land, when you acquire machines and equipment, you bear some fixed costs. That is why fixed cost will never be zero. It remains constant. It is positive always. It is positive and it always remains constant. But variable cost may be zero, because when you think about production, there will be variable cost. When you do not think about production, when production is zero, there is no variable cost. When you start production, you start power supply. When you start production, you start supplying raw material. But when you do not start production, there is no requirement of power supply. There is neither requirement of your raw materials. That is why fixed cost is known as your what I told you, that it will be never zero, but variable cost can be zero. Variable cost can be zero, but fixed cost will never be zero, because in the beginning of the production, you have to, when you arrange land, then you have to pay rent. When you arrange machines and equipments, you have to pay for that. That is why fixed cost cannot be zero, but variable cost can be zero. So I have told you many points regarding that. Fixed cost, independent cost, variable cost, dependent cost. Fixed cost, meaning of fixed cost, I told you, actually. Payment for the use of fixed factors is known as a fixed cost, actually. And payment for the use of variable factors is known as a variable. I told you the example also, which cost will be coming under fixed cost. Permanent employee, the salary for permanent employee, the payment towards the rent, land, the payment towards machines, equipments is a part of your fixed cost. And the payment towards your daily laborers, raw materials, power supply is a part of variable cost. So this is the important part of distinction. I hope you understand the distinction between fixed cost and your variable costs. So we have analyzed much about cost. We have discussed about what is cost. Let me tell you, cost is the expenditure borne by the producer. Cost is the expenditure made by the producer to produce a given level of output. And what is cost function? Cost function. If a question comes in your examination, what is cost function? You should write cost function is the relationship between cost of production and output produced. Symbolically, you can write C is equal to function of Q. Q stands for your output. We have also discussed about money cost, real cost. Cost paid in monetary terms known as your money cost. Cost refers to all types of sacrifices, all types of pain, all types of effort that is undergone during production process will come under real cost. Then we have distinction about economic cost. Economic cost consists of explicit cost, implicit cost plus normal profit. Explicit cost, as I told you, it is known as your accounting cost because it is recorded in book of accounts, but implicit cost is not recorded in book of account. Why? I am telling you that when a producer hires factors of production from outside, when he hires land from outside, he has to pay rent for that. When he makes arrangement of capital from outside, he has to pay interest for that. So this type of cost will come under your explicit cost. But when you go for implicit cost, actually, implicit cost is the cost, actually, it is retained by the producer. It is not being paid outside. It is instead kept inside. It is not being paid inside. When a producer owns a land himself, when a producer owns a land himself, and when he pays the rent, he doesn't pay the rent, he actually remain the rent with himself. And that is called implicit cost. So implicit cost is the cost actually which is paid for the factors owned by the producer. For the factors owned by the belong to the producer, and this cost is retained by the producer himself. This is not being paid outside. Rather, it is retained by the producer himself. That is not your implicit cost. And we will also discuss about opportunity cost. It is a cost for next best alternative use. We have told human resources are unlimited, but human wants are unlimited, but resources are limited. So within that, actually, we will use one resource. We will use only one resource for only single use at one time. We cannot use a resource for multiple uses at a single time. So when you are telling that we can use a single resource for a single use, single purpose at one time, then we are sacrificing the use of the resource for other purposes. You are sacrificing the use of the resource for other purposes. That is why this is called your opportunity cost. Then we talk about normal profit. We talk about the distinction between fixed and variable cost. We talk cost on the basis of time, short run and long run. Short run cost is the cost which is available, or we can say where we are getting a short period of time. Production involves a time period of two types. One is your short run, one is your long run. In long run, we can change. Actually, you should understand the concept very clear when you understand about fixed factor and variable factor. You cannot change all the factors in short run. In short period, we will only change only variable factors. We cannot change all the factors. So in short period, there will be two types of cost because there is two types of factors, fixed and variable. But in long period, actually, we have only one factor, that is your variable factor, and accordingly there will be variable cost. So the distinction of fixed cost and variable cost comes important on the basis of time, that is short run and long run. In short run only, there is, I am repeatedly telling, in short run only, there is the distinction between fixed cost and variable cost. But you will never find fixed cost during long period, because nothing remains fixed during long period. Everything goes variable, everything goes changing during long period, and accordingly in long period we will get only one cost, that is known as your variable cost. So I hope you understood the terms of related to cost concept. In course of our discussion, we will discuss about many things, many theories. We will discuss about that. Short run, long run cost, we will go to discussion about that. We will discuss about total fixed cost. We will discuss about total variable cost. We will discuss about your average cost and marginal cost. Actually, we will discuss about average fixed cost and average variable cost. We will discuss many things in course of time. But for the time being, I think you have understood all and each concepts related to the fundamental concepts of cost concept. Fundamental concepts of cost concept. I hope you understood. I hope you understood all the concept of cost. We have discussed, we have analyzed different types of cost. Thank you very much.